Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, I'm very excited about today because today is, I can't believe it, the first Friday of the month, and that means the employment situation number comes out. And what a surprise this number was. Actually, the market rallied on it a lot because people are concerned about our economy not doing well. Well, look at this. Estimated jobs are 180,000. They came in at 287,000, well over 100,000 jobs more than they expected. Now a little bit changes here. We did have prior was 38,000. That was revised down to 11,000. And also to the employment rate rose from 4.7 to 4.9. That sounds like a negative, but it's not. It's a strength because what's happening is that more people are saying, hey, there's jobs out there. I'm going to get in the market and get one.
Oh, exactly. And I think what this speaks to is, it's such a short time frame, a month. And everyone's like, oh my gosh, the employment situation is terrible. Only 38,000 jobs were created. Now 11,000 revised down.
Right.
But that's why we look at year over year, quarter over quarter. It's a longer time frame and really smooths out this volatility because this is pretty volatile. As you can see, 38,000 to 287,000. So again, don't just look at 1 month and think that is fact.
And I wonder how many people sold stocks last month because, things are falling apart, things are terrible. We didn't do that, but I'm sure some people did.
Yeah, and I mean, average earnings is another important thing. You want people to be making more money so they have more money in their pockets, go out and buy things. As you can see, average earnings rose 0.1% month over month. And while that might not seem like a lot, look at this. Average earnings year over year up 2.6%. And important to think about here, if we see a 0.1% gain every month, that's more than 1.2% because you have to consider compounding. It's more around probably 2.5% would be my guess.
Right, exactly, yeah. So got to understand the numbers. That's what we're trying to do here for you. Let's look at the company that kind of relates to this, Robert Half International, which is an employment agency. You can see the current price around $38.66, not far from the low at $34.34, the high $58. You can see it was way up over the last 5 years, and that's pulled back. Let's take a look at the numbers to see what they look like, see if it's a good investment or not. Again, we can see staffing and risk consulting services, that's what they do. They're in the employment area, they get jobs with people and so forth. Look at these numbers. Sales up 7.8%, earnings per share of 15.4. I think they're benefiting from the job market right now.
Oh, definitely. This company has a very strong balance sheet. A current ratio of 2.11 means they have more than 2 times current assets over the current liabilities. Look at this, debt to equity, 0.11%. Pretty much no debt on the balance sheet, always positive when they have a strong current ratio and very low debt. Now getting our target sell price going out to December 2017, estimated earnings per share on a GAAP basis are $3.25. This gives us a target sell price of $53.63, more than 30% above the current price. So I'm liking the staffing agency.
I think it looks pretty good. If we could say Holy Toledo, let's say Holy Toledo.
Yeah. Holy Toledo.
Okay, there we go.
There we go.
So that's a good company for you on this Friday and so forth. Let me ask you if you're currently happy with the return on your money, your investments. Maybe you're afraid, don't know what to do, and you're scared of the market. Well, we've been managing money for over 30 years here successfully at Wilsey Asset Management. Maybe it means it's time for you to give us a call here at our firm.
I want to call and have a conversation with us. Our phone number here, 858-546-4306. And if you've missed any Smart Investing daily briefings, go to our website, smartinvesting2000.com.